Hello my friends, this is the video that I made on natural gas prices just 6 days ago, when the price was at $33.45, and my main assumption was that we have to land lower in the range of about $30 mark. And here is the actual price action. As you can see, we hit exactly $30 mark and we had several reactions out of this range. So, this is the pure evidence how powerful technical analysis is, and if you want to enhance your trading skills, feel free to subscribe to my YouTube channel or to join my Patreon account, where for the $35 a month you will be able to drastically enhance your trading skills. On top of that, for the first 100 subscribers, I will do a giveaway. I will do a technical analysis based on your request on any asset that you might have. And guys, it takes me about 1 hour to do this analysis, and 1 hour of my work costs about $100, and for the $35 you have a very good price on this deal.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
So, and let's continue with the price chart itself. How I got this movement to the downside at this very point? It is quite simple if you know the basic principle of technical analysis. If you know that 5 waves on a smaller scale according to Elliott wave theory is only 1 wave on a bigger scale, and the ordinary retracement should have a shape of simple zigzag, we have this structure, we have to have this structure, and the most probable range of potential trend reversal is the golden pocket range. And that is how I define these ranges of about $30. On top of that, it is the confluence with the round number itself, and all round numbers for any asset might be the ranges of support and resistances based on the psychology of the broader audience. On top of that, we have completed 5-wave structure in our C wave, and we know that C wave should have 5 waves, strictly 5 waves in it. That's why it is a very good contender to be a lowest point for the retracement, right after which we might have the next leg to the upside. And let's continue with the fundamental news. Let me show you this update. We are on tradingeconomics.com. And let me quote to this. US natural gas futures extended losses to below $2.8 per MMBTU on Thursday, the lowest in 2 weeks, after EIA reported a smaller than expected storage draw. Government data showed US utilities pulled 154 billion cubic feet of natural gas from storage last week, less than market expectations of 164 BCF decrease. The report also showed gas in storage remains 11.2% above the seasonal norm. Natural gas prices were already under pressure due to forecasts of reduced demand and increased output due to warmer late January weather. Additionally, US LNG export plant flows hit a 1-year low, likely due to energy firms redirecting gas to the domestic market amid elevated power gas prices caused by extreme cold. And I have to say that in general, according to this forecast, we don't have an exact roadmap where this asset might go. But in general, we can see that the late January forecast for the weather is quite mild. That is why we have more bearish pressure on the ticker symbol BOIL and other ticker symbols like Natgas spot prices and natural gas futures. And we have to be cautious with any position of these assets. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, you know that the structure of ABC correction should have a certain number of waves inside the each and every movement, and A wave should have 3 or 5 wave structure in it. We have 5 of them. Let's take a look right here. This is the first, tiny second, third, fourth and fifth. We have to have strictly 3 waves inside our B wave, and if we zoom into, let's say, 15-minute time frame, we can clearly see this movement, and this is this structure. We have, this is our A wave, B, and third wave C is right here. And we have we have to have 5 waves movement inside our C wave strictly. And we have it. This is our first wave, This is our second. This is the third, fourth, and we are forming or already formed the fifth wave. This means this might be the very good contender of the trend reversal, especially if you take a look on a bigger picture, and especially if you put into the consideration the range of about $30, the golden pocket range, and the $30 mark as the range of support by itself. On top of that, guys, let's take a look on other ticker symbols. If you take a look on natural gas spot prices, you can see we have pretty much the similar structure. We have an ABC correction right here, and we have even more defined B wave right here, and we have 5 waves again in our C wave. Natural gas futures, let's take a look on this asset. We also have the same price action, and let's define these waves. And I have to say that if I pull the fib retracement tool from the lowest point to the highest, right here we completed 5 waves as well. This movement is again at the golden pocket range, and if you take a look on the natural gas spot prices, we have pretty much the same pattern. We didn't even break the 0.65 levels, but we broke it with natural gas futures, as you can see right here, and with the ticker symbol BOIL leveraged ETF. This means we potentially might have another tiny leg to the downside that will complete the fifth wave on a smaller scale. And guys, the invalidation point for this movement should be 0.786 level, because the lower this asset goes, the less likely it will be the bottom of the second wave on a bigger scale. That is why, let's do it this way, that is why, guys, your potential long position might be from this point all the way down to 0.786, and your invalidation point should be at below the $27.5 mark, because if this asset breaks it to the downside, we have not more than 15% to see the trend reversal. That is why you have to be cautious, but in general, if this assumption is correct and we will have the movement to the upside from this point, let's define the potential target with the assumption that this is the lowest point. I have to pull the fib retracement tool from the bottom to the top of the wave and to the bottom of the retracement. And the most probable range where we might land is 1.618 extension level. It is $56.33. Which implies, let me delete unnecessary tools, I don't need this one, which implies from our current range about 87% of upside potential with the downside potential of about 9%. So almost 10-to-1 risk to reward ratio is quite lucrative. And guys, if you know how to properly manage your position, it is a very good opportunity to enter your long position with this asset. And I will do another update within the next several days on this ticker symbol. And if you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys until next time. Bye!
I got the cash in the bag, stadium